Good morning. I am going to take 1 second and talk to you guys for a second about stock market gurus and why your favorite stock market gurus are losing money hand over fist. And I'm going to break some of this down for you. And so get comfortable, buck up, seatbelt. We're going to get started on the Black Financial Channel right now. Good morning, everybody. Good morning. Good morning. Welcome to the Black Financial Channel. That's theblackfinancialchannel.com. My name is Dr. Boyce Watkins, your friendly neighborhood finance professor. On the Black Financial Channel, we believe in Black wealth, Black economics, and Black family. We also believe in closing the racial wealth gap and ending generational curses. If you agree with this philosophy, put a hashtag B and the number one in the chat, hashtag B1. And so shout out the city that you're from also. I'd like to see what city you guys are coming from. I'm in New York City right now, about to head home. I brought the kids up here. I had some meetings to go to, so I wanted the kids to get a chance to go to a Broadway show. They hadn't done that yet, and we went to see Beetlejuice. And some of y'all saw me. If you go to my Instagram page, which is the Real Boyce Watkins, you can see I decided I wanted to dress a little funny that day, so I had on a bright red jacket. I went Suge Knight. I had my Suge Knight look. I had a red jacket with some red sneakers, and so some of y'all thought it was fly, some of y'all thought it was corny, but it doesn't matter because I just decided I wanted to have fun, and my kids liked it, and my wife liked it, and she thinks I'm sexy, even if nobody else does. So anyway, let's jump right into it. I'm going to talk to you guys about something that was on my mind today. I was thinking about what's going on with the stock market, and I see you, Reginald, from Philadelphia, and Guy from Long Island, New York. Kuwait is in the building, South Bend, Indiana, very nice. Atlanta, yes, Atlanta. We have a house in Atlanta. We're actually going to go down to Atlanta for a little bit this summer. And I was thinking about the stock market, and one of the things that's really interesting is that you have a lot of stock market gurus that are out here who don't. Well, I've always known that they don't really know exactly what they're talking about. I would never say anything. I'm not going to point out any particular people or anything like that. I'll let you kind of figure it out. But I've noticed that there's kind of a game, like an industry game, about sort of presenting yourself as a guru, even if you're really not. And a lot of people, maybe they might have been a waiter in their previous life, or maybe they were, working at Ford, and they figured out that they know how to talk to people and convince people they know what they're talking about. And as a person who studied finance for a long time, you guys know my background. I'm not going to repeat it, but I did teach at Syracuse University. I was on the faculty there. Some of it kind of makes you squirm a little bit. It makes you kind of squirm. It's almost like being a doctor, a medical doctor, and seeing people promoting science and medicine that you know is going to kill people, that you know isn't healthy, but you can't say anything because people get mad. They think that you're hating. They think that you're criticizing. So I'm not going to say any names. I'm going to let you guys figure that part out. But I just wanted to take a second to kind of let you guys know, a lot of you, if you've been following some of these gurus, or if you've joined and you're studying with them, or you're paying them money to show you certain things, you'll probably find that there's a general trend happening right now. The general trend happening right now is that most of these gurus are getting body slammed by the stock market. They are getting absolutely killed. The things that were working in 2020, 2021, 2019 are not working now. They're not working anymore. And I know exactly why they're not working. They're not working because the Fed is no longer giving away free money. Before, you had a very loose economy. You had very low interest rates. You had a very accommodative Fed that was doing everything to create what is called asset inflation. Asset inflation came along before the regular inflation. A lot of y'all know about the inflation with gas prices and food prices and everything else, and the cost of rent. You know, the rent is too damn high and all these other things, but you've never learned a lot about asset inflation. Asset inflation is where things like the stock market and real estate create these bubbles because the Fed is making so much money easily available. It's also part of the reason that student loans went so high. I talked to a guy. I had a meeting yesterday at the Yale Club in New York with a guy who happens to be Jewish, and he's buying a university for millions of dollars or something. And we were talking, and he's a former law professor at Yale. And we were talking about student loan debt. And I said, I speculate student loan debt started because they started making all this money available. They started loaning all this money. He pointed out a company, I can't remember the name of the company, that it has made an insane amount of money by giving people massive student loans without hardly any form of a credit check or any sort of measure of whether or not, or your capacity to pay and all these other things, right? So asset inflation or bubbles kind of build up when you don't properly manage the economy in a certain way. So the Fed has not done that. So basically, because of asset inflation, you had a lot of people that would come along and say, hey, I know how to make money in the stock market, right? And they would go and they would throw a dart at a wall, like that a monkey could do. And they would just pick random stocks. And they would say, look at how much money I made from my stocks. My stocks are all doing great. All this money's being made. And some of them would be as young as like 14 years old. I think I saw a little kid who's in the 10th grade saying, I know how to make money with stocks. And the thing is that you got to know the difference between knowing how to make money when money is scarce versus knowing how to make money when money is abundant. One of the students in the Black Business School is a brother from the group Belle Biv DeVoe. And they used to have a song called I Thought It Was Me. Anybody remember that song? I thought it was me that made that girl this way. I thought it was me. Come to find out she's like that every day, right? So what happens is with the market, you have something that Professor David Hirschleifer, who's on my dissertation committee, he refers to this as self-attribution bias. Self-attribution bias is when something happens, and it's really good, and you think it's you. You think you did it, right? You prayed this morning and the sun came out, and you think the sun came out because I prayed this morning, when really what you prayed about doesn't have a lot to do with what the sun's going to do. But you think so, right? Maybe you're convinced, like, hey, my spiritual energy made the sun come out today, and that's why the whole world, 100 million people are going to get sunshine because of what I said, right? So ultimately, this self-attribution bias pops up with a lot of the fake stock market gurus. I have to call them fake because most of them, if you look in their background, they don't have any training. Maybe they sold stocks a little bit, or maybe they made a little bit of money or whatever. But for the most part, if you look at formal training in terms of what they actually learned, what they can explain to you about stock market theory at a high level, it's just not really there. And so what would happen is I would sit there and I would just kind of grit my teeth, because they would give it recommendations that were completely inconsistent with what the research says. They would what's one example? Let me think here. I'll give you an example. Basically, if I had gone to my dissertation chairman and said, I want to do a dissertation on why technical analysis and bar charts and those all those little little support lines and all that, I want to show why that works and why you can make a lot of money consistently that way, he would have said, get the hell out of my office. He would say, get out of here. There's been thousands of research papers written on it. It doesn't really work that well. Now, it works sometimes, and that's the thing, right? If I pick stocks by flipping a coin, it's going to work sometimes, right? Sometimes I'm going to land on heads and I'm going to pick the right stock and I'm going to make money, and I can show you, look, see, I flipped the coin and landed on heads. I picked the stock, I made money. So there's evidence that will make you think that it works. But what I'm not really showing you is how it applies over a long period of time. And also, all the times that I'm actually losing money too, right? So what happened with the stock market in 2020, because of the frenzy, they call this irrational exuberance. Because the stock market got so trendy, you basically had a gambling culture in the stock market. And if you go to any casino and you talk to people who are gambling, every gambler has a system. You know what I'm talking about? You ever see a degenerate gambler that will tell you they have a system for blackjack and a system for craps, and this is how they make their money? But if you look in their bank account, you'll notice who wins. When you have a gambler go up against the house, who wins? Does the gambler typically win, or does the house typically win? Somebody answer that for me. Who wins, the gambler or the house? It's the house. The house wins. Right? But the gambler comes back. Why would the gambler keep coming back? If the gambler's going to lose money, if most of the gamblers are losing money, why would you keep coming back? Well, the reason you keep coming back is because you have this hope that amongst the few people, the few gamblers who do win, you can be one of the ones who win. It's similar to how they get little black boys to all think that they're going to be rappers, or all think they're going to go to the NBA. Because somebody's going to the NBA. We saw in the NBA draft, I was right here in New York. They had it in Brooklyn. So somebody's going to the NBA. So a lot of times, young guys will be like, "Well, what about me? Wait, I'm 6 feet tall, and I'm the best basketball player in my neighborhood. Why can't I be the next LeBron?" Well, right? Well, you want to say to them, like, well, because you're 6 foot and LeBron's 6'9" or 6'8", and you're not. You're the best player in your neighborhood. You're not. You got to be one of the best in the world to make it. But they don't want to hear all that, right? Because you're crushing dreams and all this other stuff. So a lot of times it's this hope factor that will drive people to keep coming back or make them believe in something that just isn't there. So what's going on right now is you're having a moment of reckoning because all this support from the Fed that used to be there that was allowing anybody, even people who couldn't read to come out and say, I'm a stock market guru because I picked 5 stocks and 4 of them did really well. Now that's gone. Now that has gone. You are in a different stock market right now. This is not a gambling market. All the gamblers exited the building. Most of the Wall Street bets people that were on the forums and picking the meme stocks, they're gone. They've exited the building. They went back to Vegas. They're all on DraftKings betting on basketball games now because they have a better chance of in gambling than they actually do in making the fast money in the stock market. This is not a fast money market. This is a slow money market. This is a market where the things that will tend to work for you are things that are tried and true. My investment approach has always been one where I don't need to make all the money and I don't need to make the money right now. I don't need to make fast money and I don't need to be greedy. I don't want to be greedy. I like to have relatively low risk and I'm willing to plant my money and patiently wait for my money to grow into something bigger. The reason that I think this way is because that's what the theory supports. The theory supports consistent long-term investment in high-quality companies that have prospects for doing well for the future. It does not support quick flips. It does not support quick technical swing, whatever. I'm just going to move, buy, sell, buy, sell, buy, sell, buy, sell. And you can't get caught in this frenzy. If you give me 10 people that are doing the fast day trading thing, 3 or 4 of them are going to do well. And on some days, 7 or 8 of them are going to do well, right? But for the most part, the research, if you go back and you read thousands of research papers that have been done by very smart people who analyze, are these people actually making money? The answer is no. So if you're talking about having fun, then fine. Keep doing what you're doing. Keep doing the fast money stuff. Keep doing the whatever the gurus are saying or whatever. But if you're talking about making that real money, that Warren Buffett style money, if you notice, Warren Buffett is not a gambler. Warren Buffett does not throw his money around like it ain't nothing. Warren Buffett is a patient, long-term investor, and that's how he got to be as wealthy as he is right now. So that's my 2 cents on the issue, and that's pretty much what I wanted to share with you guys in terms of what's going on. And I encourage you to be thoughtful about how you invest, and don't just believe somebody is an investing guru just because they sound good. I would actually look into the background and say, what are your credentials? Where did you formally learn this stuff? Like, do you have, because right now you need a financial doctor. If you don't have, because if you don't get a financial physician, like somebody that really knows how to do heart surgery, really knows how to do brain surgery, you're going to have people cutting on you. You're going to be like these poor ladies that get those BBLs in their friend's garage. And next thing you know, they got to get everything amputated. A lot of people are being financially amputated right now because some of the investment information that they've received and advice they've received has just been bad. Okay. So anyway, guys, I'm going to go. My family's waiting on me. We're about to go get on our airplane in a little bit. But also, in case you guys know, on July 7th, we start our covered call income generation program. It starts on July 7th. It's going to be 4 weeks. We're going to meet once a week, and I'm going to show you how I make money for my family. It's a very conservative model. It's one that generates consistent income. It's not fast money, but it's something that I've been working on for years, and I decided that I was going to go ahead and do a class, and I'm doing this class one time, and that's it. So if you're interested, feel free to go to boycewatkins.com, and I'm actually doing a Q&A for those of you that are curious, that are like, is this really going to give me what I want? Well, I'm doing a Q&A tomorrow night, Monday night at 8 p.m. You can go to boycewatkins.com. You can see the link for the Q&A right there at the top. You can also see the link for the program right below that. You can feel free to just take a look and decide if that's something that you want to take a look at. And in the Black Business Schools, you guys know we have a 100% money back guarantee for the first 30 days. So if you're not happy with anything that you invest in, and it doesn't cost that much, we will give you all your money back because we want to make sure that you're happy with everything that you do. We do know what we're talking about. My credentials are wide open. They're right there online. You can look them up. So feel free to go take a look. All right, boycewatkins.com is my website. I'm out of here, guys. Have a good day and happy investing. I hope you make $1 trillion. Love you. I'll see you soon. Peace.